Hello everyone, welcome back. I hope you guys are having a wonderful Sunday. I wanted to share with you guys why I think you should not ever use stop loss orders, and I wanted to give you a very good example of why you should not use them. I will say from my own experience that the most desirable things to own in your portfolio are generally going to be the ones that are more than likely the most volatile, especially with these new emerging technologies like, Tesla and Bitcoin and things like nano dimension that are, very disruptive and trying to solve very big problems or change the world in some way. Maybe it's an analog way. Well, everything's turning more technological, more digital. Anyways, my point is that there's going to be volatility in these because exchanging is happening between people, and there's lots of fear and greed in the general market, so that way they are able to pry these off of your hands, pry these desirable assets that everyone really wants to own at the end of the day, but is willing to move them in and out of their hands for a few extra bucks. This is a very long, drawn-out introduction. I want to make it very clear to you guys what happens when you use trailing stop losses and stop loss orders, and whenever people here on YouTube are telling you to use them. So anyways, I'm going to go back to Bitcoin when it was around between $10,000 and $12,000. I want to point out a good few drops that we experienced in just this range. This is not the limit of all the 10% plus drops. These are just this is an example of what happens when you try to time the market and place stop loss orders to try and quote unquote limit your risk. Let's look at this first drop in May of 2020. We saw a 20% drop in Bitcoin's price from around $10,000 down to around $8,000. If we fast forward to June of the same year, 2020, we see a 11% drop. We fast forward not even 2 weeks later, we get another 10% drop. We fast forward maybe 2 weeks later from that, we have another 10% drop. Now, there is some time that goes by without any substantial drops, but then, price runs again. Everyone's chasing it. It breaks 10,000. Whoa, oh my God, Bitcoin's plus 20% from its recent high. Well, from there, it drops from 12,000 down to $10,500, $10,600. So if you would have had trailing stops in any of these, you would have been stopped out. And then let's look at this last one. This is actually the biggest one besides that, one of the bigger ones besides the one that happened in May last year. This happened in September of last year. We saw a drop from 12,000 all the way down to below 10,000. I want to show you something very interesting. Let's say you would have bought it at this high back here at 10,000 and you were trying to catch a breakout. But let's just say you bought it and you did not put a stop loss. So if we would have gotten the same point and simply held it the whole time, if we would have held it the entire time without really touching anything, we would have literally not moved at all. You would be in profit the whole time at 10,000 because 10,000 is like one of those psychological numbers, right? At 10,000, if you would have bought it there because, you wanted Bitcoin, you were scared it's going to go higher, but then it fell and you simply just said, screw it, I'm not going to touch it, you would have literally been better off not doing anything at all. Okay, you literally could have forgot about your Bitcoin purchase and been better off than trying to time the market over and over and over again. You actually would have turned a profit simply by holding the thing and not selling it. That is where we are now. We are pretty much hugging $60,000 right now, so there's a chance that we could see Bitcoin go up above the recent high of close to 62,000 and then pull back and keep the market, the general market, retail market red. I just wanted to make sure you guys understand why I choose not to use stop loss orders when I place my trades, and if I am red, I simply hold it and accumulate more. It is as simple as that, guys. Just wanted to make sure you guys understand that. This really could apply to anything that you decide to invest in, even in the stock market. All the orders that you place are public information, so they see whenever there's a pile of orders somewhere. So there always is motive to manipulate price in some way, shape, or form. So don't be fooled to think that there is no one manipulating the market. There always is some market manipulation. Ultimately, if it's something that's desirable to own, they will manipulate it, but you want to be on the right side of catching the market instead of trying to time it and be smarter than it. Simply buy what you think is desirable and is going to be worth your money and time, and hold that investment as long as you have that conviction, and you should be pretty well off. it's really more about building habits and consistently building a portfolio and not just trying to get rich over a few trades. But anyways, that is it for this video, guys. Thank you guys so much for watching. If you have any questions or anything, just, reach out to me on Patreon. I actually do better reaching out to you guys on Patreon than Discord, just because Discord kind of has a lot going on. So please reach out to me on Patreon if you want very fast response times. I get back to you very quickly there. Anyways, that is it, guys. Thank you for watching. I will see you in the next one.